Hello guys, and welcome to another episode of Price Pattern. On this particular series, which is going to be a couple of videos, we're going to be talking about chart patterns, all right? Because this is very important. If you understand chart patterns, there is no way you open your MT5 and within a day of trading you won't be able to pull out trade with risk to reward of 1:2, 1:3, 1:4, or even risk to reward of even 1:6 or 1:7 sometimes. So price action or chart patterns are very important in forex trading. And on today's video, we're going to be talking about double bottom. We're going to be talking about double bottom, double tops. All right. So what are double bottom, double tops, and what are the secrets of trading double bottom, double tops, so that you can always make money in forex trading with this particular catalyst? Hello everyone and welcome to the channel. My name is Ndemeza Golof. On this channel we talk everything about trading, business, personal finance, crypto, and tips to help you stay profitable as a forex trader. So if this is your first time coming to the channel, or if you're watching my content and you haven't subscribed, please hit the subscribe button to subscribe to the channel so that you can be able to stay along the course or to also stay updated once we come up with awesome content like this. Without even taking much of your time, let's just go straight into the video and see what we have on today's video. On today's video, remember we're talking about what is a double bottom, double top. Simple. Then how do you trade double bottom, double top? What are triple? After talking about double bottom, double top, what are triple bottoms, triple tops? Then key points to consider when trading double bottoms, double tops. All right, as simple as that. As simple. By the end of this video, I promise you, you'll see a lot that has been lagging in your trading arsenal. You will see a lot that has been lagging on your trading psychology, and it's not your fault. It's not your fault. That is why they say if you are not informed, you are deformed. But at the end of this video, you'll be very informed when it comes to this particular pattern, and you'll be able to start making money in forex trading by just spotting out this particular pattern and knowing how to get in and get out using this particular pattern. Good. Let's see what we have here. So, what is a double bottom, double top? As simple as it is. Double bottom, double top. Anytime you hear of a double bottom, they say these are two. See, let me change my color and so that I can use red. Good. They say these are two consistently. All right. Let me make sure I highlight this. These are two consistently resistant levels which are formed at the end of a downtrend, which indicate a change or a reversal in the market direction. Remember, we're talking about double bottoms, all right? Double bottoms. It is a consistently level, or it is a consistently resistant level, which is formed at the end of a downtrend, which indicate a change in the market direction. All right. Remember, it is already certain. It has already indicated that the market has already changed direction. So anytime you see a double bottom, is just something like this. All right. A double bottom is just something like that. So anytime you see a particular structure forming like this, the market comes here to this level. It forms this one. This particular bottom, that is the first bottom. It goes up again, come back again, and didn't break that particular level and form another one. So when it got there, when it got there, the sellers were still in control, but the buyers won the battle at this particular level. At this level, the buyers won the war or won the battle at this particular level. Then the buyer pressure was more powerful than the selling pressure. So that's why you see the market had to take another turn, or the market changed the direction. And when it got to this level, it break this level, which is called the neckline. All right, this level is called the neckline. So I'll explain more about the neckline when we start going on how you can be able to trade double bottoms, double tops. So that is just an example of a double bottom. And if I have to change the color, you see here we have our first bottom, and here we have our second bottom. All right. So that is why we have double bottom. There are two bottoms, 1, 2. All right. Now let's go to the other one. Let me put back on red. Good. So that is why they say they indicate exhaustion. All right, they indicate exhaustion. That means the market is already exhausted. If it's going down, the selling pressure is already weakened. the sellers are already tired, or the supply is already getting finished. They can't supply again. Good. So now that is why they say they indicate that is double bottom, double top indicates exhaustion in a downtrend and a potential change in the market direction. Exhaustion in a downtrend and a potential change in the market direction. So that is very, very self-explanatory. Let's see an example here. This is very clear. This is very, very clear. This is a live chart. What we were explaining was just a hypothetical example, just like a hypothetical example. But now, this is a live chart. This is MT5. So I took this example from MT5, and you can see from this level, the market has been going down. The market got here from what? That is our first bottom. Then when the market came up to this particular level to form, this is what at this level, you see what we call the neck. This is the neckline, all right? This is the neckline. The market came there and then changed direction, came back here to that same level and didn't break that same level to form what? The second bottom. From that level, see what happened. The market came up, even break the next line, the neckline, and boom. It has been going up ever since. You see? So you see how simple this thing is. This thing is just as simple as it sounds. But sometimes you guys just decide to make things complicated. Keep your trading very simple. Everything you need is on the chart. The money you need is on the chart. You just need to know how to remove that money. You just need to know how to deliberately just move to your chart and get that money out. The money is already there. The market already came here from the first bottom. Okay, went up. Now once it has already formed the neckline, what I'll be watching is to see if it's going to break this area or not. If the market comes down and doesn't break this area and have a turn, I'll name that one my second bottom. The only thing I'm waiting for to get into that trade will be the neckline to be broken. As easy as that. The only thing I'm waiting for me to be able to get into this trade is for my neckline to be broken. And see what happened. The neckline got broken here, came back, retest, and boom. So now, when we go to the other slide where I'll be showing you how to trace support and resistance, I'll show you now how to place your stop loss and how to place your target. All right. So as simple as that. The market had the first bottom, second bottom, neckline broken, and the market went up straight away. So that is why I say anytime you see this particular pattern, there is already a clear indication that the market has already changed direction. That is why they call it a reversal pattern. It is a purely reversal pattern, all right? So let's go to on our slide. So that is just what we call double bottom, double top. And that is just what we call double bottom. Then what is a double top? A double top is just the opposite of a double bottom. All right, as simple as that. A double top is just the opposite of a double bottom. A double bottom, you see something, just know that a double bottom will form a W shape. A double bottom is like this, and now a double top is like this. All right, double bottom, first one, then double top, first one, second one. As easy as that. You can see here we have our double bottom and there we have our double top. There is no other explanation you can give again because the double top is just the opposite of the double bottom. You can see here they say these are two consistently resistant levels which are formed at the end of an uptrend. Now is at the end of an uptrend. So the market is going up. Then at the end of that uptrend, then you see that pattern forming at the end of an uptrend. It means the market has already changed direction, which indicate a change in the market direction. Then they indicate exhaustion in the uptrend. So this is in an uptrend and a potential change in the market direction. So here you see this is a typical. If you open your chart, this is MT5. All right, this is a chart in MT5. You can see here we have our price and our time. So the market has been going up. Here, the market turned at this particular level, giving us what? That is why here we have one. That is our first stop. We're talking about first stop. It came down again. This is now our neckline. Our neckline, all right? After forming the neckline, the market went up again. It didn't break that particular level. Forming what? The top, the second top. That is now double top at that point. The only thing I'm waiting now is to see if the market is going to break my neckline. See the pressure. You can see one candle, just after that, two candles. You can see the pressure in which the market takes to break my neckline. So I would have gotten in somewhere here. Then I'll show you where to place your target. All right. So as soon as I see this level, I'm just waiting for my neckline to be broken. And I get into the trade and see what happened. The market changed direction. This happen if you go on your MT5 and do back testing, you see these structures all the time. They happen all the time because the market is always moving. There's always demand and supply. There are always people buying, there are always people selling, there are always people cashing out. So you see these structures everywhere. You see these structures all the time because it just depict the buy and selling actions in the market. All right. So that is an example of a double bottom, double top. Now let's talk about how do you trade double bottoms and double tops. This is very easy and it's self-explanatory. I've already explained it. As soon as, let's take this example. This is our double bottom, right? If my double bottom is here and the market is sloping down, as soon as I see my first bottom, listen this very carefully, please. As soon as I see my first bottom, I'll be waiting to see where the neckline will be formed. So I'll be waiting to see where the market will turn. So if the market change direction, even if I was still here, as soon as the market comes here, see, this is invalid. This area is invalid. You can't call this area double bottom, double top. Why? Because see, the market came here, there was a turn here. When the market had a turn here, this would have been our neckline, but that neckline was broken below. So once that neckline was broken below, so it became an invalid area for us to call double bottom but double top. But see this one is very, very clear. This one is very, very clear. The market came here from the first bottom, came up, that was our neckline, then it came down again, it didn't break that level. You can see it didn't break that part of the first turn or the first resistance level. The market didn't break it. So we call that one the second point. Now, the only thing we are waiting for the market to break. We are making for the market to break our neckline. So as soon as this neckline, this is our neckline. All right. Remember, we're talking about double bottom, double top. This is our neckline. As soon as the market breaks this neckline, you buy somewhere here. That is why I call this buy. So where do you put your stop loss and where do you put your take profit? As soon as you buy here, your stop loss, let me change the color. As soon as you buy there, let me show you where. Let me put this on black. Your stop loss should go from here to here. So your stop loss will go below 2. So your stop loss will go below the right neck or the right turn. So your stop loss will go somewhere there. And let's call this one arrow. All right, let's call this one from here to here arrow because your stop loss should go below that level. Then where do you put your take profit? Your take profit should be now, see this. Your take profit should be now what we call 2 arrow. All right, so your take profit should be at least 2 arrow. So if I'm risking 50 pips here, or let me have 50 pips, then my take profit will be now what? 2 arrow will be what? 100 pips. As simple as that. With this now, I just need to be right. Having this is what we call a risk to reward. A risk to reward of at least 1:2. All right. That is what we call a risk to reward of at least 1:2. So if you are trading this pattern, as soon as you get into the trade, use a risk to reward of at least 1:2 to set your target. Because 90% of the time, as soon as the market strive for at least 1:2, you can start seeing some exhaustion again. So the best point for you to be able to set your target is to go for 2 arrow, which should be now to the 2 times your risk. If the distance from the entry point to the low of that particular second top or the second bottom, if the distance between the buy and the entry point and the low is 50 pips, then I just need to measure 100 pips and that will be my take profit. As simple as that. That will be my take profit. And the same thing will happen for a double top. If the double top is like this, and remember the double top, to trade a double top, you need to wait for the neckline. This is our neckline. You need to wait for the market to break this neckline. And as soon as this neckline is broken here, this area now will form what? Will form our risk. Will form our risk, which is our arrow. And for you to determine your take profit will now 2 times your risk, which will be now 2 times arrow. So if I'm risking $10 here, my risk will be now what? $20. Or if I'm risking 20, it can either be in terms of dollar or in terms of pips or in terms of the dollar amount. If you're risking 10 pips, you must go for at least 20 pips. If you're risking $10, you must go for at least $20. All right. So that is how you are able to trade. So you are able to trade double bottom, double top. You see this in forex trading all the times. Good. So now let's see what we call triple bottom, triple tops. just as we were explaining the double bottom, double top, a triple bottom or a triple top is where instead of the market breaking the first neckline, the market gets to that particular neckline again and you see another turn. As easy as that. So the market gets to that particular neckline, and instead of breaking the neckline, you see another turn. You see another turn that comes back to that same level. All right. So now, sometimes that is why that sometimes in forex trading, a triple bottom or a triple top can even give you a potential support and resistance level. Because here I would have just seen this area as my support level and this area as my resistance level. All right. So you can either call it your triple bottom, or you can call it your support and resistance, because you start forming support and resistance. Here you have the first one, you have the first touch, the second touch, the neckline wasn't broken, and the third touch. And then the third touch, if I want to still trade that that triple, if I want to trade that triple bottom, I'll still be waiting for the neckline to be broken. And the neckline got broken here, and see what happened. The market went up. So I would have gone for 2 arrow, and my risks now, my stop loss should be somewhere here. This area will be now what? Equal to my risks. Which should be equal to my arrow. Two arrow means I'll be going for 2 times my risks. All right? As simple as that. That is what we call a triple bottom, and a triple top will just be the same. So the market will come here, form that particular top. So the sellers will start pushing down at that point. The market will have a turn again. Come back at this level, then the sellers will start pushing again here. The market will come back again, go up again. The sellers push the market there, then finally, boom, the market break that particular neckline. That is what we call a neckline. So you would have gotten in there. So as soon as you start seeing 3 or 5 or 6 bottoms or repeated levels on the bottom or top, that level is beginning to become invalid. All right. So with that being said, let's go to the other slide. So here they say key points to consider when trading double bottoms and double top, because just like any system or just like any strategy, there are rules you have to follow. So these are key points you have to consider. So the first point we have on our list, they say they are typically reversal patterns. I think I need a red since I'm now on a black background. So let me look for red. That's why here they say they are typically reversal patterns. Anytime you see a double bottom or a double top, the market has already changed direction. It's not like a candlestick patterns where you need to wait for another confirmation to tell you that the market has already changed direction. Because in forex trading, if I see maybe a hanging man or a shooting star, okay, that is an indication that the market might change direction. It is giving me that indication that the market might change direction. But now, so long as I already see this one, as soon as I see this one, I know very, very clearly that, okay, at this point in time, the market direction has already changed. At this point in time, if it was an uptrend, now we are having a downtrend. If it was a downtrend, because of the double bottom, now we are having an uptrend. Then they normally indicate exhaustion in a particular trend. We already mentioned that exhaustion in a particular trend. If the market is going up and I see a double top, I know there's exhaustion. The buyers are already tired, or the buying pressure is already finished. The market has already changed direction. Then they normally initiate the beginning of a potential major support and resistance. I just explained that on the previous slide. That I was telling you that, okay, as soon as you start seeing those levels, repeatedly. All right, they normally indicate the beginning of a major support or a major support or a major resistance level. They can be used to either manage or execute a trade. I've already explained that with you guys, because there are sometimes, as soon as you see it, it tells you to get into the trade, or if you are already in a trade, so that one will help you now to be able to execute that trade. But if you are already in a trade and you see that particular pattern being formed, it will help you to manage the trade, because it will help you to know that, okay, since I was trading in a trending market, the trend is already finished. So maybe at that point you have to close your positions. All right. So it will help you to either execute or manage your trade. And then a double bottom will normally form a W shape, while a double top will normally form an M shape. This is a double bottom, that is a W shape, and this is a double top, what? An M shape. So those are the few points you just have to note when it comes to double bottom and double top. With that being said, we've come to the end of this particular chart pattern. So please, the exercise I want you to do is go to your MT5, try to be able to come out with as many of these patterns as you can. Go through your MT5, you see many double bottoms, double tops. These are one of the highest occurrence price patterns you can have. So go on your MT5, do back testing, come up with as many as possible. Tell yourself that, okay, use the same entry strategy, the same stuffs I've taught you guys. Say, okay, if I would have gotten in at this point, it means I would have gained $500 at this level. I would have gained $1,000. I would have gained this. At the end of the week, I would have gained maybe 2,000, 3,000, depending on your account size. So go back to your MT5 and do this back testing so that you can be able to see these strategies on yourself. They occur all the times, all right? So please, back testing is the highest. In Forex trading, the practical aspect of it is 80% more than even the theory. Once you already listen my teachings, the highest part now is left on your part to be able to practice this. It's like being a pilot. You can't be a pilot by sitting in a classroom for 1 year or for even 20 years. You actually have to get into the plane and pilot that plane. It's like swimming or even riding a bicycle. You can't learn how to ride a bicycle by sitting in the classroom for 10 years. You actually need to step on that bicycle and fall many times to learn how to ride a bicycle. It's the same thing in trading. After you've already listened to the lectures, please go back and do the practice. You'll be able to see these things. And the more chart pattern you see, the more trade you take, the more practice you do, you become very, very acquainted with it. You'll be able to just open your chart, you see a structure and you know, okay, this is a valid structure. You see this one and know that, okay, this structure is not valid. All right. So with that being said, if you want to be part of my Telegram channel, I have a Telegram channel of maybe almost more than 2,000 or 3,000 subscribers. So if you want to be part of that channel, it's totally for free. A community of Forex trader. The link is on this video. And if you also want the best Forex broker to use, you know what to do on this video. The best thing I always say, you might know how to trade Forex, but if you don't have the right tools, you won't be able to make money. So check on this video description to also choose the best Forex broker I use, which is IC Market. And also, if you like the way I teach, make sure you leave a link. You leave a like. Please make sure you leave a like on this video and check this other video, which I'm going to leave. Check this other video, which is the next. This is the next price pattern, or this is the next chart pattern which you're going to be able to watch. So watch this video and also watch this playlist. If you haven't done so, watch this playlist. It contains all the videos on this particular course, so you have to watch both. And if you like the way I teach, please click here to be able to subscribe to the channel. Till then, I'll see you on the next video.